How do I get those stocks that can perform up 200% in a year or 6 months? Hey, Nigerians like money. Nigerians like money. And when Nigerians move abroad, we still love money. Jesus. And someone responded, this is the $1 billion question. And when I checked the comment section there, a lot of other people were asking similar questions or questions in similar line. So to put some context, a personal finance influencer posted some investments on Instagram that have returned around 10% on average annually. And then someone responded with this comment, looking for 200% return in 6 months. Because 10% return is too small now. How am I going to be as rich as Femi Otedola if I'm only making 10% average annual return on my investment? It doesn't make any sense. And when I saw this comment, I decided to respond to it in 2 parts. Number 1, I want to clarify expectations around investing in the stock market or in real estate or in other assets or commodities like that. 2, I also want to discuss what can be done to actually build wealth faster. Now, let's go to number 1. Let's clarify expectations around investing. There are 3 investment components that determine how fast your money will grow. The increase in any of these factors is what determines how much your money grows. 1 is the principal, that's the money you start with. 2 is the rate of return, how much it grows every year. 3 is the time, which is how long you let the money grow. Now, if you want to build wealth faster, you have to either increase your principal, your rate of return, or you can wait longer. For instance, imagine you can afford to invest $200 every month, and you are investing it at 10% average annual returns. If you are doing it consistently over 40 years, you will have $1 million. Look at the mechanism there. Small monthly principal of $200 every month. Reasonable return of 10% based on the performance of the S&P 500 over time. But you have to make up with that small principal and reasonable return with a long time, which is 40 years. 40 years. The people that are asking for 200% returns don't want to wait for 40 years. And to be fair, nobody really wants to be old before they can enjoy wealth. Your hair is gray, you're not even active anymore, you can't do anything. It doesn't motivate anybody. And in addition to not wanting to wait, people that are asking this question also do not have a lot of money to invest, so they cannot increase their principal as well. So the only component left that they can tweak to increase their wealth is the return. And that is why they are looking for 200% return in 6 months. And unfortunately, this is why schemes like MLM, CBEX, Forex trading, cryptocurrency trading are still highly desirable. Despite all the scams and all the warnings and everything out there, it's still highly desirable because the fundamental desperation for high returns is still there. These people know that there are people looking for this kind of return every year. So they go out to them and they cash out by marketing their schemes to them, and they make their money from registration fees, teaching people how to trade, or from scamming or whatever it is. And it's an obvious scam. Now, don't get me wrong. I know that there are investments like Bitcoin, Apple, Nvidia. If you bought these investments when they started, your returns will be astronomical. But unfortunately, nobody has a time machine that can allow us see into the future to know which investments will do well or which investments will become big. So considering this reality, what can actually be done to build wealth faster? 1 is to start early. Time is your best friend. If you start investing earlier, you can retire younger by the time you become a billionaire. Number 2 is to increase your active income. You need a strong active income first. I don't know who needs to hear this. You need a strong active income. Active income is money you make by directly working for it. You trade your time, effort, or skills for payment. That is your seed money. You have to figure out a way to earn with your skills, time, or effort, whichever one it is. Passive income does not replace the need for working for the vast majority of people. That's just the reality. Except your parents are rich or they're into politics. The mechanism is simple. More active income means you can make more money, and then that means you can also invest more money. The more money you invest, the faster you can compound it into wealth. You just have to find ways to increase your active income significantly. Consider side hustles, consider starting your own business and scaling your active income, consider promotion at your job, anything at all that increases your income. Next point I want to make is keep investing consistently. The beauty of investing is not finding the one magical 200% stock. It's consistent, smart investing over time in a very good investment that is well diversified, that gives you exposure to several hundreds of good companies at a go. You continue to put your money in investments like this, And over time, it will continue to compound for you. And that is how you build real wealth over the long term. So on one hand, you are making good active income. On the other hand, you are making good passive income. And this adds together and builds wealth for you. I've seen people that retire in their 40s. Everyday people, regular people. They started working in their 20s. They retired in their 40s. This is very, very possible. It all depends on how much you make, how early you start investing, and how fast you start building wealth. Those are the factors. Find ways to manipulate these factors rather than looking for shortcuts to quick wealth. If you got value from this video, please don't forget to like the video, subscribe to the channel. Please subscribe to the channel, hit the notification bell so that anytime I post a video, you are notified about it, and share this video with as many people as possible. It really helps the algorithm. It signals to the algorithm that the video is decent. Thank you very much, guys. I'll see you in the next one.